Right. So, a very warm welcome to all you wonderful viewers of Universal Mentors Association. Coming up is a power packed panel discussion where we are talking about how fintech is shaping up the digital lending landscape. But before we go to that amazing session, we have with us our own Mr. Manish Naidu, who's the founder of Brain Wonders, who would be telling us how DMIT is actually changing the complete landscape of training and hiring for the BFSI segment. In this amazing panel discussion, we have star-studded speakers. Our moderator, Mr. Jitendra Mohan Singh Shah, who's the CEO, SME and Payments, Fincare Small Finance Bank Limited. Mr. Srinivas Rao, Bhupeni Group CIO, Telangana State
Telangana State
Cooperative Bank.
Cooperative.
Mr. Amit K. Sharma, Managing Director and CEO, SHFL Housing Finance. Mr. Akshay Malhotra, who's the co-founder and CEO of Early Salary. Mr. Dominic Vijay Kumar, who's the Vice President and CTO of Art Housing Finance. Mr. Dipesh Karki, who's the co-founder and CTO of Lane Dane Club. Mr. Ritesh Jain, who's the co-founder of FlexiLoans.com. A huge welcome, a huge shout out to all the wonderful speakers of this amazing star-studded panel discussion. But before we go to the panel, I request Mr. Manish Naidu, who's the founder of Brain Wonders, to please take this amazing session away.
Thanks, Sandeep. You have amazing confidence, and the voice note is pitch note is high. Thanks for the first online session with so many banking partners together. Akshay, Ritesh ji, Dominic, Srinivas, Sir, Amit, Jitendra. Good afternoon, and welcome to this beautiful panel. What
Hi
we do
Manish.
Thanks. What we do in Brain Wonders is we revolutionize the aspect of hiring or talent acquisition by a very unique alignment called DMIT. The same way how fintech companies are disrupting the market by way of technology, we have disrupted the market by introducing a new novel technology called DMIT, which is a genetic intelligence test. Now, this test is being utilized by a lot of banking financial services partners as well, because they identify the potential of a candidate on the basis of his biometric scans, and that's what we specialize in. So I know the panel is more about how uh, uh, digital disruption is taking its own advantage in this particular lineup, but what I'm trying to also introduce to all of you is a digitally innovative product called dermatographics multiple intelligence test, which is a US patented product. We take genetic fingerprints. Why fingerprints? Because no two fingerprints are ever the same. Fingerprint is last to be degenerated from a decomposed body. Fingerprints gives you a lot of genetic intelligence data, which is being very uniquely used by corporates, by banking financial sectors, obviously, and more importantly, startups. Because you have so much of a cash flow, it is so very important to identify and take the right people in at the right moment, because it's so very easy for anybody to be a one star alignment in a job interview. You can be a rock star in a job interview only to identify later on that he is not the right candidate. So this is something which we specialize. We have got close to 230 odd corporates working in. We also are aligned, and the DMIT segment is also working with us for close to 1,200 odd schools across the country. We have 108 franchisees which we are aligning with. NSDL is one of our partners, and we are planning to launch a career hub along with them in almost all the centers of NSDL, so that the career alignment can be looked in a much more better perspective. I know all of you sitting out here would have ideally wanted to do something else, and most of us reach at a particular place because of peer or parental pressure, and we always feel that there is a second or third innings which we have to work on. So yes, the company is a 10-year-old firm now, and it's one of the early edtech startups, because we have identified the need for digital innovation a long time back. And that is what we do. We transform lives, we transform people, we transform the genetic intelligence test, and identify and ensure that all the stakeholders who have taken the right people also know the genetic potential of the child or other person. So that's what we specialize in. A lot of BFSI companies use our tool for introducing their ULIP plans or their child plans. So it is also being used as a marketing initiative. I think with Mr. Sandeep, we are also trying to make one more event with BFSI exclusively only as to how psychometric test can be used for understanding the mental alignment of the people. We are also in touch with the CIBIL. CIBIL only identifies 750 and above credit score, but you never know the intention of a person, whether he is defaulting, whether he could default, what would be his emotional alignment. So we are also getting into that space of understanding the emotional well-being and the emotional financial well-being of a person. So these are the things in offerings, and yeah, I mean that's what we do. Any of you who would want to do a genetic test with us, kindly feel free to contact, and we'll be more than happy to have a complimentary test being passed on to you all guys, so that then later on you can introduce it in your firm. So with that note, I think I'll end it short, because I think the panel would want to speak about a lot of disruption which is happening in, and I'm also keen to hear from the industry leaders as to what we should do next, and what does the future have in store for us. So I think I'll pass on the line to our moderator, and in case the moderator is not available, I think Mr. Akshay is going to take over from the list of questions. So thanks everybody, and smiling faces, and it's so happy and so nice to see all of you uh, on the board. Thanks a lot.
Yeah. Sorry to interrupt everyone else, right? Manish, that's really a brilliant solution. Actually, I have sent you a LinkedIn request to connect with you to understand more. I think the biggest challenge all of us are facing right now is identifying the right set of manpower. So I think you have, took out the right set of problem in order to do a psychometric analysis. I think I'd love to learn more about it.
I will. Thanks a lot.
Thank you. Yeah, Akshay, over to you.
Akshay, you are on mute. Akshay, you are on mute.
Thank you, Manish, for setting up a very interesting presentation at the beginning. I think I'm going to break the ice to the audience as I'm stepping in as a moderator rather than the speaker. But digital lending is very core to the business which I run. And I think we have been one of the first players to disrupt the category in a very good manner. Let's cover the session by opening up a few points, which I like to give in. And I'll request all the panelists to chip in and come back on how they feel the industry is shaping in, etc. I think some landmark points. Today, if I look at the digital lending space, we have already made a larger impact than, let's say, the classical lending models in the Indian economy. Typically, if I look at apart from savings account, the first large common credit product introduced was the credit card, which today has close to 2.1 million users, or 21 million users, 2.1 million crore customers. And today, the fintech community who's come and built digital lending has almost given access to 4 times more consumers already. So the impact with the industries is making is fairly very large. And today, as most of the stalwarts of the industry are present here, we love to cover how impact is being generated and how the consumer is getting much more acclimatized to the way the new way of lending is coming and hitting the industry. As I introduce all the members and they step in to talk more, I think let's start off with posting the first question of how digital landscape in lending is changing with fintechs coming in. Maybe I'll start off as a fintech participant myself. Early Salary is one of the largest consumer lending platforms today. We have now delivered close to 2.6 million loans on our platform. We have now disbursed 6,500 crores. We have 100% of our customers have a savings account. An average customer earns 40,000 rupees, is 27, 28 years old, and an average customer is borrowing 40,000 rupees from us. That means he has access to credit in some manner or the other, but a traditional institution like a bank or an NBFC was unable to cater to his requirement in the right manner at the right cost. We have succeeded in building up a consumer base who's loyal to us. We have been able to retain almost 90% of our customers for more than 4 years average. And this has impacted in, let's say, us building up this repeat behavior, this capability of providing multiple products. And where I say the digital revolution has started, where consumers like you for a specific experience, and they look at you beyond just a fintech provider, but a partner to them in their digital experience, right? Maybe we'll go around the table. We'll first go to Ritesh from Flexi Loans and hear him out on the same topic.
Yeah. Hi, everyone. Just a quick background about there's a lot of disturbance at the background. I don't know whether I am only hearing or everyone is hearing. If
No, Ritesh, I think everyone is hearing the same disturbance.
yeah, so if someone can
Something
fix
wrong.
it.
I think let us all mute our mic and only the speaker keep it on mute.
Yeah. Yeah, perfect. It's much better. So hi everyone, this is Ritesh. I'm co-founder of flexiloans.com. At Flexiloans, we give we give loans to small and medium enterprises. Ticket sizes on an average is around 5 lakh rupees, and we give loans across India. We have office in Mumbai, and we cover approximately 15,000 pin codes. We are truly digital to that extent. Entire means as compared to traditional banks and NBFCs who operate through branches, we don't have any branch as such. And Akshay rightly said that fintech ecosystem is creating a large impact. And when I see and I meet uh, customers to whom like FlexiLoans has been giving loans, like I recently met customer in Udaipur who had a very humble beginning. He was a worker starting a business for 5 years, not growing over there. He took loan from Flexi Loans digitally because transaction costs were lower. He could set up his factory unit at a very marginal cost and employ 10 people over there. So that's a small loans. Even 5 to 10 lakh rupees loan can create a large impact to the economy and in the lives of people, and further create employment. That's how. And this type of lending was not possible earlier with a branch based network, because cost of lending of setting up a branch was so high, and bank manager or these customers had no courage to walk into a branch because this they would have got rejected upfront. Right now 45% of our loans, like people who take loans from us, are taking business loan for the first time. So that's the kind of impact what we are creating. And I personally feel very proud to create such kind of business where which is not only having a profitability or viability from the business point of view. At the same time, it creates a large economic and social impact to that angle. And that's how all fintech, I guess Akshay would be also proud of it, like people are able to meet their own livelihood needs because of
Oh, absolutely, Ritesh. 50% of our customers have never taken a loan from any other institution. So that's a
yes.
huge indicator. Yeah.
Yes.
All right. Should we go all the way to Dominic? Dominic, you run a very high impact housing finance venture. So I'd love to know more about it.
Okay, my name is Dominic. I'm the Vice President and Chief Technology Officer for a housing finance company. We are in the affordable housing segment. Okay, and in the industry from last 7 years, working on the northern and the western part of India. Okay, for me, my company is basically driven by the technology. When I say art, ART, the last word, the alphabet always tells us technology. So any process we do, it is very clearly driven by technology. Like talk right from the customer acquisition up to the sanction part. I can say it is completely digitally driven, 100% digitized. Only the disbursement part we couldn't do because of the regulatory requirements and certain limitations in the process, not in the technology part of it. For us, fintech, digital lending is something, the kind of customers we interact, okay, the kind of customers we interact where it's more of a rural and semi-urban customers, where digital lending has helped us to some extent in acquiring the customer, disbursement of the thing. Customer experience has given a different look. Communication with the customers has changed the perspective of customers coming back to us. Okay, and when you talk about the kind of today what we do is we acquire a customer at the doorstep, that we use a completely digital platform, where today I clearly close my customers lead. The lead which pass on to my core system is totally digital, right from your CIBIL, your PAN verification, even your Aadhaar verification data. So the part of the technology, part of the process which was initially a manual process, it is completely converted into using a technology, and this is a digital process happen. So my TAT has drastically reduced, and this also gives a confidence to the customer that when you're working with a housing finance company like this, where you get an in principle approval at your doorstep, say that you're eligible for so much of loan, this is your tenure, this is your rate of finance, subject to your obligation, and all that. So all this is done using a digital technology, using a proper platform. At the same time, we are partnered with one or two fintechs also to help us on certain activities, like working on the non-traditional data, the non-traditional data points, like your social scoring, psychometric this activities, and even your SMS scorecards. We are building the SMS scorecards. So all this technology has helped us to serve the customer in a better way, especially a rural customer. I'm not talking about the urban customers, the rural customers who are very new to the technology, very new and first time buyers, first time credit people with the credit record and all that. So for us, especially in the affordable housing segment, what happens? It is housing finance is more of a legacy built company. It is typically that you go when you talk about your loan against property, your property papers, getting the data, acclimating it, collecting the KYC itself used to take a long time. So the technology and the digital, what presently we are using, has brought on all this and built a different image in the housing finance, and especially in the affordable segment. So digital and fintech has equally played a role for our complete journey as on today. That's what my feeling.
Thank you, Dominic. Dominic, we're going to go to Mr. Srinivas. Srinivas, I think you represent a state cooperative bank, and it's a very different enterprise when it comes to a fintech. I'm sure you are users of many fintech
Yes.
companies. How do you think that the digital lending processes are changing, and how fintechs can help traditional companies and banks change the way they look at the ecosystem?
Yeah. Good afternoon, everyone. Uh, in fact, I'm the Group CEO for the Telangana State Cooperative Bank and also for District Central Cooperative Banks and also the Primary Agricultural Cooperative Societies. So we have a common technology platform for all the cooperative system in the state, particularly. Yeah, Shay rightly mentioned that. So I work in a totally different area than when compared to all of you, because almost many of you have born into technology, whereas our platform is completely a legacy manual based to migrating to the technology. So that is where we are. In fact, the mandate for the financial inclusion, for that matter, for the financial inclusion is more there on us. Simultaneously, we need to compete with bigger banks, with the latest banks like our payment banks who burn in technology, and also the new generation private banks like our HDFC, Axis, ICICI, Kotak, who burn in technology, and our public sector banks, which are very huge in this area. And fintech, after fintech entered into this space, it is really helping the smaller banks, because fintech companies, smaller startups are fintech companies are coming out, and they are coming out with very competitive uh, solutions as far as in the price perspective, and also in the technology perspective. Also, with very light technologies, they are coming forward and helping the smaller organizations. See, if I need to procure a core banking platform of an Infosys or TCS or someone, it is very costly, and my banks may not be able to uh, afford to that. So in this area, particularly the fintech companies, when after they enter into this digital area, it has become very easy for most of us. And fortunately, I can say that we have completely digitized our cooperative institutions in the state of Telangana, and we manage our own data centers, our own cybersecurity operations centers, and everything. Now we are completely concentrating on implementing this technology for the business development. And digital lending is one which will definitely help us in the financial inclusion also. See, this is a powerful tool for us because digital lending enabled so many financial service providers a way to offer much better products to the masses. Here, so high quality financial services also we are able to provide to the rural areas. And
Got it.
all these days, people are thinking that financial inclusion is only digital onboarding of the customers who are not having the bank accounts. Now the perspective is getting changed. Now we have to provide lending to the people who are not there, as rightly mentioned by Akshay and Ritesh. They told that most of the customers never took loans from any other institution. That is the reality. So, as per the recent statistics, only 15% of the Indian households have taken the loans from the system, organized system. So, that we have seen in our rural areas. So, in these rural areas, specifically when we approach the people using the technology with the handheld devices, today we are going to the masses and we are able to deliver the required things and we are able to onboard the people and also providing the support. So definitely digital lending
Thank
is
you.
fintechs are supporting us in this digital lending area. Akshay.
Srinivas, we should love to. I think a lot of synergies with, I'm sure, audience and the fintechs will reach out to you. And in fact, interestingly, I've been engaging with multiple large banks because fintechs today not only bring in a customer, but also help larger institutions to convert their customers because of technology and a lower OPEX. In fact, I was engaging with 5 other banks over the last 1 month, and I was surprised that the amount of openness that they have in working with fintechs has gone up dramatically. Let me jump to
Yes.
Deepesh. Deepesh, I'm sure technology wise, there are lots of advancements in fintech taking place. Maybe if you could talk a little bit more about, while you introduce your company, if you could talk about what's the new advancements that you see in the ecosystem.
Thank you, Akshay, for the opportunity. Uh, I represent LinkedIn Club. I'm co-founder and CTO at LinkedIn Club here. We are an online platform for peer-to-peer money lending and investments. So back in 2015, when we started LinkedIn Club, we thought that we'll be a physical platform wherein we'll be onboarding borrowers and lenders to a digital space and do the transaction some way with a combination of both physical processes available through check deposits or whatsoever using technology in order to show the matchmaking and everything. I think, Ritesh and Dominic mentioned, right? I mean, the challenge with the physical process is, somewhere or other you'll always hit that bottleneck. Okay, you'll not be able to grow further. So we realize that this is not something that's going to be scalable, especially for the economy of today's generations, right? Wherein the Gen Z wants everything at the tip of their fingers and wants it right away, to make their decisions or their decisions quite rapidly changes. So that's when we started with a new product called InstaMoney, and we can after launching the product, we could only realize that with such small product, right, where we just disperse a 10,000 rupees loan, and we could see the potential that it has in order to bring changes in their lives. Like people have started uh, planning the vacations, meeting their small family needs, doing a lot of things, right, like home renovation, contributing to the family needs, like a wedding, etc., all through a 10,000 rupees loan. So that's where we thought maybe if it is not so there were the set of customers who were otherwise not eligible in our earlier loan product have now started becoming eligible. So the problem with the small ticket size loan was we had to churn these as fast as possible, right? So there was a time wherein we took about a couple of days in order to disburse a loan. From there to disbursing a loan, right from onboarding to disbursal within 80 minutes, is something where we played around a lot with a lot of technologies. So, right, starting with the KYC of the customers, right, in terms of making sure that we are delivering to the right identity in the right address and using right mechanism in order to verify the bank account. I think there are tremendous, fantastic, RegTech technologies out there, to make sure that we do right assessments for our customers as in today. Even the underwriting parts of it has been advanced quite a lot, right from the traditional underwriting mechanism using the bureau reports and all, to non-traditional mechanism of underwriting, wherein you look at a lot of metadata of the customer, to build a persona around it, to make sure that you are doing right kind of prediction in terms of the capacity of the customers to consume the loan. So the technological advancement on these area has made a good progress. The bigger challenge that the industry overall was facing was in terms of collection, wherein we've been able to do a lot of interesting stuffs over the last couple of months, wherein we've introduced the concept of auto calling, making sure that you do happy callings to the customer, making sure you analyze the sentiments of the customer in order to make sure the next type of call is pitched accordingly, and making sure that the time is scheduled accordingly with the customers, and make sure that you bring the NLP based experience to the customer in order to make sure the customer does the payment on time. So these are some of the factors or the kind of technological advancement, right? Such as, like I mentioned, the AI-driven NLP-based calling, to make sure the right kind of interactions is provided to the customers in the absence of human, right? Something that is beyond the general human capacity, something that we've been doing over the last couple of years, and I believe the innovation will continue to do so. Another landmark innovation that the Indian government has brought in is the UPI, and that's something that has definitely changed a lot. It changed the game for a lot of startups, like even flexi loans and early salary, I assume, right? Wherein our customers majorly use these stack in order to do all kind of transactions. And going forward, I believe with the launch of CBDC, I'm sure we'll be able to take this to a new height.
Thank you, Dipesh. I'm going to take out one insight which you mentioned about collections analytics at NLP. I think over the last 2 years, we've been recording every voice conversation of the customer. And today, to 3 times higher success rates, we can predict if the customer bases his voice modulation, whether he will pay us or not. So you may be
Right.
speaking to a
That's
bot or a human being, but the
correct.
decision to give you the extension or not give you the extension or to ring your bell tomorrow morning is now delivered by the NLP. And this is at scale,
Absolutely.
right? We are almost collecting maybe 4 to 5 lakh EMI payments a month. So, and we
Correct.
do it with just 62 people in the collection infrastructure. So using
That's fantastic.
technology to really manage business becomes very important. I think we'll have our last panel speaker, Amit. Amit, interesting. You're also from a housing finance company. And one of the questions I'd like to pose to you is not only would you like to talk about how you see the landscape coming in, but where do you see the evolution of digital lending processes coming in? Are there some changes in processes that you see in your company where digital adoption is being done? And any advice for fintechs and tradition, how they are going to manage the new processes to work with larger companies?
So hi, good evening, everybody. So myself is Amit Sharma. I'm the founder of Satin Housing, and having said that, I represent a group which is called as Satin Credit Care. We are a wholly owned subsidiary. So we are number two largest microfinance in India with almost 30 lakh customer base, a crore of a transaction in a month. So it's a pretty large volume that as a group we deal with. But I would say that technology as a right blend, has to be different for different business lines. Because the kind of hearing that I've got from the panel is that most of you are disbursing somewhere around 40,000, 1 lakh, 2 lakh loan, which is more on a behavior pattern that you capture by various data analytics point. But if you talk purely of the what we call as an affordable housing finance lending, and being the founder myself, I would say that technology can just be a facilitator for us, because there's a lot of complications on the legality of the documents, legal side, the technical side, and I still believe that these large scale lendings, the human touch is very very important. So from my perspective, even if I want to digitalize my entire housing finance business, I cannot do it because there are a lot of interlinking on I would say that IT developments which are still there, relating to the legal titles, the procurement of documents, and certain other checks. So it will take a lot of time till the time the economy and the regulators and the other mechanisms which are associated for lending gets matured up and they also get digitalized. Secondly, I think most of the panelists and most of the business people who are sitting here, they are doing more of a digital lending, whereby, with all due respect, the lending cycle itself and the business on the fintech side itself is not more than 3 to 4 years as a concept. So a lot needs to be seen that what happens in terms of lending money versus the recovery of the money. As Dipesh said that, and Akshay, you also agree that even the voice modulations or the data points that you would have developed, they can give us an indication that whether the customer will pay or not. But at the end of the day, this data modulation will only help us in getting this, decision. But we will be suffering the financial losses if we don't do the due diligence on the ground properly. So one thing I completely agree that fintech, as far as my business is concerned, can be a very good process facilitator, whereby we can save a lot of money on the OPEX side, ensure transparency. It can be a great tool for us to generate leads and do a great penetration into various markets. I'm a very non-IT guy, so we are one of the few companies which have developed a QR code kind of a marketing stuff, and I find it very interesting, whereby you can, just like a Paytm, you place it on various shops and generate leads, and you facilitate the connectors. So I would say that for the large scale lendings, which are secured lendings, it has to be the right mix of technology and human blend. For maybe very retail oriented loans, I think your platforms deserve a lot of kudos. And yes, the penetration is extremely good, and it's miles to go. But at the end of the day, I would say that there's a lot needs to be done on the secured side of the business. As far as your question on how we are going to adopt this fintech lending, for me, if you ask me from the business perspective, it will be more of a lead generator, but it can never be 100% executing tool for housing finance companies, and especially the affordable housing finance companies. Because in the case of the salaried customer, you can have all the documents, but we are taking care of the customer base which is on the lowest end of the pyramid, whereby you have to go and assess each and every customer at his workplace or maybe the homes, and that is a larger part of the business which is going to come up in a very big way. So there's a lot needs to be done there. Internet penetrations, the use of the technology, the knowledge of the people to use the mobiles for such facilities is also at a very nascent stage in the urban markets. So there's a great need, a lot of work to be done on the ground on the rural side of the markets. So yes, in your highly retail oriented business, it's a great bang. The only thing is that it needs to be seen that how are the collections panning out over a period of time. And yeah, it's the hot star right now. So I agree what you're
So,
saying.
Amit, I love the point that you put in that we're all in a business, tech is an enabler. But I'd like to give in a few highlights, maybe about my own business as an indicator to the entire audience. I mentioned we have done close to 6,500 crores of disbursement. You're right, our credit cycle is 4 to 5 months only. An average customer is borrowing 4 to 5 months. Our cumulative losses, including NPA provisioning, is less than 65 crores. It's actually less than a percent, which means at a dispersal level. So while most people believe that fintechs have to evolve to show capability not just of disbursable, also getting the money back, I think fintechs have shown that in a very sharp manner. And I think that's what digital disruption is, that how do you cut down the time of learning, right? And how do you empower many other players working with let's say the traditional landscape. I think today we are trying to work with many housing finance companies, because the same customer who buys a house needs to make his kitchen and make his house livable, and we come and finance that to, let's say, 1 to 2 lakh rupees to make that house livable. And then we work as a fintech to power the EMI finance. We don't want to give him cash, we want to pay for the TV, the fridge, the washing machine, the kitchen, right? And that is where partnerships are the next way of traditional players working with, let's say, fintech lenders to enable the entire part. And of course, the largest element here is how do you risk manage, how do you build tools and engines for risk assessment. Maybe Manish, who's as a was just a speaker when the panel started off. Maybe Manish, you like to talk about assessment tools that you can that in your line you use for hiring, but where do you see some synergies with, let's say, risk management? Manish, you're on mute.
Thanks. It was a very enlightening panel. Generally, in the school, I used to sleep after 10 minutes of discussion. And the fact that I'm still alive and I'm listening means that there's a lot of value addition which all of you are putting into the system. Mr. Srinivas is dealing with a very state government panel system, and for them to move into the fintech is going to take time, and which they are doing it so very well. Having said that, as I told in the start of the term, that we are trying to talk to Sibyl and probably to few more lenders, stating that let's understand the investment capacity, a obviously. Second is the mental stability or the emotional stability of a person with respect to what he thinks or how loyal he can be. Like for example, McDonald's, we did a test where we could identify that how loyal or how lie detector set sort of a question. So either to a repeat audience, repeat customer, or to an existing customer, we can check the financially stability from a mental angle, which is going to be a very strong alignment. Sibyl will only tell you about the scores, 750 and above, and you're stronger. And everybody gives loans to those people, but that doesn't mean that there would not be any defaultment system. So I think it will be a very interesting game to play where we could find synergies in identifying assessments of people who have given loan without the financial assessment tool of emotional assessment tool, and then finding out the difference after 6 months as to how much the tool has helped in. I'm definitely sure it will be a huge value added proposition for anybody and everybody who would want to give money at the low ticket size. And low ticket size is
Okay.
something which is the run of the mill. I mean, the largest
Sure. Thank you.
sectors like Bandhan Bank or even the Satin Housing, do you all thrive on the fact that lower ticket size is the one which has the lowest amount of NPAs as well? It is easier. So I think we should enter into the model to understand the emotional stability of the person. Very important.
Sure. Thank you, Manish. So maybe we'll go quickly around the table and ask each participant here of one new change that you expect the industry to go through. And we can start off with Ritesh. You're on mute, Ritesh.
Yeah. So I always say this, that fintech revolution has been on the back of public goods infrastructure that government has been providing. For decades, we talk about the UPI framework, or it is the Aadhaar stack or India stack, what you call entire stuff over there. So there are a lot of developments on the same side. Government is planning for future, whether you talk about ONDC on the digital commerce side, health ID system over there, or you talk about digital rupee that government is talking about. I guess fintechs will evolve and try to capitalize upon all these new initiatives, which are not owned by any entity. Like if you compare this with US and other entities, where Google is trying to own digital identity ecosystem. Okay, in India we have DigiLocker, right? In US you don't have something called DigiLocker. It is Google is launching their own version of DigiLocker, and they would Apple is having their own version of DigiLocker to have the identity system in place. So in India, like there are a lot of initiatives that government is having on the back of this stuff. I see a lot of innovation fintechs are could be having. Last Bharat Pay is the best example, right? There was a Bharat QR code, and Bharat Pay took that QR code and pasted it in all shops, and that was the fastest company to paste those QR code and own that particular ecosystem and get a lot of customers on the back of it. So fintechs will take off all these new initiatives and capitalize on it.
Thank you. Srinivas?
Yeah. In my view, shortly this open banking kind of thing is going to come, and again data centralization and availability of common data to all the lenders or all the service providers part of this, and more regulations are going to come. more regulations are going to come in the digital space, particularly digital banking or digital financial space specifically, because of the lack of proper regulations. You have seen recently some mobile apps which were providing loans, and people were suffering on that. So we have seen this kind of non-regulated environment sometime back related to the microfinance companies, which have been people have suffered a lot, specifically in Andhra Pradesh and these areas. And now the because now digital fintech companies are coming faster in these digital lending areas. So definitely more regulations are going to come and more facilities are going to come for the service providers and also for the players like us and also for the public. This is my thing.
Thank you, Srinivas. In fact, you brought out a very big point about regulations and managing the industry better. Many other fintechs, including me, have helped co-found FACE, which is Fintech Association of Consumer Empowerment. It's the first industry body is applied for the SRO for fintechs. And we believe that to build a better industry, regulations have to come in and a policing body needs to be built. And that's what FACE is all about. In fact, if other fintech lenders are hearing us and are participating today, I'll request them all to become members of this new upcoming SRO or FACE, which allows a better functioning of the industry and building more consumer confidence. Jumping to Dominic, same question posted to you, Dominic. What do you think is new coming in for the industry?
It's a digital India. There's no second thought about it. Process will be done. My only concern in this thing will be a little bit of flexibility in the regulatory requirements. You know, we are almost reaching the. We are already in the digital age. Only thing, the certain regulatory requirement puts us back onto the back burner. You know, for example, if I give you an example of my e-sign, I can't do a digital sign of my loan agreement as on today from my legal team. It's been on hold. The whole process is on hold. Otherwise, we would have been one of those companies where e-signing was implemented for the complete the loan documentation process. But that's, certain regulatory requirements have to be flexible. And second thing is adoption of technology should be it should be adopted in the open mind process. You know, limitations will always be there, ups and downs will be there, problems will be there, low connectivity, that has to be there. So these are the few things which I feel which has to be overcome as the days come, as the months come. Even the government also has to look into that, flexibility in the regulatory requirements, so that we completely digitize the whole process, especially in the affordable segment as such. Though whether it's in salaried or assessed income, try bidding anything today, because everyone holds a bank account. It's not that nobody holds a bank account. It's everyone holds it. So using that process, we can do it. That's my take.
Perfect. Dipesh?
So I'm expecting a Web 2.50 actually. Wherein,
Web 2.5 or Web 3.0?
I'm expecting a Web 2.50 because I think 3.0 is something that the regulatory body would still take some more time to accept, right? But then there are some interesting innovations that the government is working towards, right? Like I mentioned, right, I have huge hopes in terms of digital currency to be introduced by the central governing body, that's by the RBI, right? So I think with the advancement of or the digitizations of the currency and digitizations of other kind of instruments, like maybe now that we are already moving towards digitizing our identity, our assessment modules and everything, right? I'm sure digital signature is not that far for Dominic as well, right? So I believe there is going to be a transition based system wherein the entire function is going to work completely digitally. Then only move towards Web 3.0. The transitional state is something that I'm expecting in over next 3 to 5 years at max.
Sure, thank you. I think we'll. Amit, what do you think is going to be the new trend coming in?
So I think Dominic answered rightly. In the mortgages business, these are regulatory challenges whereby they don't recognize the e-signatures, and maybe the e-stamping is also only there in one or two states, whereby the large work can be done on that. And third is the what we call as the legal vetting, which needs to be integrated with the the various theses and other things. So if we really need to go paperless and do it as a what we call as a 100% fintech lending into housing finance or lab. These are 3 4 points which are very very important, and then the government, I think, should come up with what we call as a public credit registry. So PCR is something, I think, which the work is going on, and it will help a lot of players, maybe offline also and maybe online also. So that is something also which really needs to be looked at. Otherwise, I think hats off to all the lending platforms online. They have done a great job, and they can be a great facilitator for people like us also, because this artificial intelligence, the machine learnings, the blockchain technologies, they're all very very innovative. Of course, needless to say, there's a cost associated to it, but surely they're worth looking at it. So this is my point of view, basically.
Thank you. So maybe I'll add one of the biggest enablers that we are seeing and the growth which we are seeing is a format known as co-lending. See, there are going to be banks who have access to cheaper cost of capital, and there are going to be fintechs who bring in operational efficiencies and lower cost. I think today what we are seeing is the amalgamation between the two. Uh, Banks coming to fintechs to become co-lenders with them, and I think the next 1 year we believe that the hyper growth in the category is because of this co-lending atmosphere getting built in, where
So Akshay,
as
I
and
agree
that's
with
a
that
huge game
because
changer coming in.
yeah, because a lot of people approach us also. It's a best marriage because banks are flush with funds, and you guys are having an excellent distribution network. And co-lending itself is a virgin concept in India. Lots needs to be seen because it depends on the banking partners also what terms and conditions are there. Because ultimately, the entire OPEX and the certain percentage of maybe the 100% collections is on the distributor itself. So
Yes,
yes, it's a great concept. It's a great marriage of the wealth versus the distribution. But again, I think the landscape has to be really seen forward how it works
yeah,
around.
absolutely. All right, I think with this I like to thank all our uh, participant coming in. Really appreciate some of the partners talking about, and we look forward to uh, un- for you to reach out to us if there are any questions, and we'll make sure that we'll happy to help in any manner. Thank you very much for the
Thank you.
conference today. Thank you.
Thank you.
Thanks,
Thanks,
Akshay.
Evan. Thanks, everyone.
Thanks, guys.
Thank you
Bye
all.
bye.
Thank you. Bye. Bye. Bye.
Thank you so much. I think this was such a amazing panel where we had discussed the lengths and breadths of uh, the topic itself, wherein where we covered a lot of important points to be discussed. So, as you mentioned, Akshay sir, why don't you share some details about the association that you were talking about? If if our audience would love to have them, we'll post them on our YouTube channel as well as our LinkedIn post following the discussion that was there. So, if you can share those details, we would love to
Sure.
have them
So,
on board.
the new institution that's been formed is called as FACE, Fintech of Face, Fintech Association Consumer Empowerment. It's meant for fintechs who are lenders to join, from retail to SME to digital fintechs. The idea is that can it become a single repository which can work with the regulator? I think it's been quite instrumental in, let's say, the Chinese and the Telangana-based lenders who are operating, how to identify the non-ethical lenders, how to weed out the bad boys. It's also put in strong code of conduct. It's helping draft the new digital lending policies. And as more members join in, we are hoping it becomes an SRO, which is for the industry by the industry, right? The industry is actually participating, building it, which means it should be the right way of building out a new category in financial services in a good manner.
Oh, wonderful, sir. In fact, just to add on to that, just to give a small perspective, we are soon going to launch our technology review platform. This is an information that we wanted to share with all the viewers of Universal Mentors Association, where we'll be reviewing a lot of technology based products that are used in NBFCs, banks, insurance sectors, and other areas wherein they are changing the future landscape. So all the startups, all the existing organizations, this will also be a one of a kind review platform by the bankers, for the bankers, absolutely free of cost. So if any of you would love to review any kind of a technology that you're presently using, or that you want to use in future, you can you can share those details with us. Very soon we'll be sharing out the forms of reviewing platforms as well. With this, I would like to thank Mr. Manish Naidu, who is the founder of Brain Wonders, for supporting us in our complete journey of hosting this amazing event. I would like to thank Jitendra Mohan Singh sir, who tried to join in but couldn't. Mr. Srinivas Rao, huge shout out to you. Mr. Amit Kumar Sharma, Abhay sir, Dominic Vijay sir, Mr. Dipesh Karki, and Mr. Ritesh Jain, who's the co-founder of Flexi Loans. Thank you so much to all you wonderful gentlemen joining in and sharing your deep knowledge, with the viewers of Universal Mentors Association. It was a pleasure hosting you. We would love to. We are also announcing our physical event in the month of August in Mumbai. Our next event for the banking and finance sector, and we would love to have all of you, joining us there. Till then, thank you so much. It was such a wonderful session. Have a great day ahead. Thank you.
Thanks, everyone. Thank you so much. Bye.
Thanks, guys. Yeah. Bye bye.
Thank you. Thank you.